Hey guys, it's Flynn. Today I wanted to talk about Troika Media Group. More importantly, the latest earnings report. Over the last 6 months, the company includes these highlights: a successive record revenue of a staggering $187.9 million. Revenue has increased over 1,100% comparative to the prior year. Adjusted EBITDA has reached approximately $5 million. The company has continued strong revenue growth in its new revenue streams. The company has also announced the full completion of the company's restructuring after the merger with Converge, which has allowed the company to reduce operation and administrative costs. The chief executive of TMG had this to say: the operational changes and record business performance during this 6 month transition period were delivered ahead of schedule in what was an aggressive timetable to alter the strategic course of the company. In the last 9 months, we repositioned the business, delivered successive record breaking revenue, diversified our revenue sectors, and implemented changes to optimize operational efficiency. The company is now focused on taking on sustainably higher margin opportunities to meaningfully improve its strategic and financial results in scalable market sectors. The management team has delivered great results during an intensive period of change, demonstrating the resiliency of our services and business model. We continue to be excited at the growth opportunities in home improvement, residential, legal, and professional services, and building on our internal consumer brand portfolio. We can now focus on optimizing our balance sheet and review strategic alternatives as we work with Jeffrey LLC to architect the best capital structure to grow our business and maximize shareholder value. So far, I think the company has really good results. I mean, as we can see, $187.9 million. As mentioned previously on my channel, Troika Media Group is working on, sustainably higher margin opportunities with, a $187.9 million revenue. If you take even a 2% improvement in margin, that's nearly $3.5 million, $4 million. So these are some real big numbers we're talking about. Now, since the company's acquisition of Converge, it has to date generated approximately $270 million since the company's announced acquisition in March 2022, which is pretty substantial. I mean, $270 million. I don't even think they bought the company for anywhere near that in terms of its revenue multiple. So the company has really done some outstanding things with what it's been able to do since the acquisition, which was really only a year ago. Now, the only negative thing that I do want to, highlight in this report with all the positives is that the company's drastic increase of its selling and administrative costs. Those went from $14.6 million to $22.7 million, which is nearly an $8.6 million increase in those expenses. Now, the company does say this is due to the increased staffing the company has to take on, which is nearing 80 plus people. So, that is pretty good excuse for that, but it's definitely something to keep an eye on to see how those increase. Do they increase linearly? Do they increase exponentially? That'll be something interesting to know. But let me know what you guys think about this earnings report. I mean, this really was an impressive earnings report, especially, the fact that this company was bought in March, or Converge was bought in March 2022, and they were able to generate $270 million of revenue for that company since then. So yeah, let me know what you guys think below. Don't forget to leave a like and subscribe, and I'll see you next time. Thanks, guys.